Traders, welcome back to another video in this series, and this is episode 5. Let's dive in. So Emma Timothy asks, I really would like to know how to identify the correct extremes. Now, understanding where the extremes are is extremely important, but you have to understand that extremes are only relevant to the time frame that you execute on, to the time frame that you trade. And so me, extremes are relevant to me because mainly I am looking at the dailies and executing on the H1 in terms of looking for my trigger event, right? But the daily time frame, those daily candles are what I'm mainly focusing on. So for me, the extremes right now, what I would be looking at, this is one extreme for me right now. And this is the other extreme. All right. So this right now is my current world. Yes, I can play the in-betweens in terms of looking for trades on maybe the H1 or the H4 chart, going to the upside or ranging in whatever the market is currently doing. But in the larger time frame perspective, from my perception of the market, from only looking at trading from daily levels of supply and demand, this is my extreme on the high of the curve, and this is my extreme on the low of a curve. But this gets extremely different once you then navigate to lower time frames. So let's go down to the H1 chart, for instance. All right. So if I'm looking at the H1 chart, now the extremes change, right? So this would be one extreme for me right now, and then this would be another extreme. Okay. And as we can see, the market has then come back down, landed nicely in this area of H1 demand, and has pushed up out of there for a nice move. So where would your profit target be? We'd take it maybe to that high, or we would at least, we would at least get our main profits here, maybe take off some of the position and then just allow the rest to run. Okay, very, very simple. All right, so as we move along now, let's just take that away. Let's just see what the H4 chart is saying on here. Actually, shouldn't be much of a difference really. No, not much of a difference. Let's go down to the 5-minute time frame. So let's just take a look here. All right, perfect. So now we're on the 5-minute time frame. The extremes change again. This would now be our extreme on the lower end of the curve, and this would now be our extreme on the higher end of the curve. All right, and once you've identified the current trend or the current event breaks, and you can start obviously trading in line with the current trend on the time frame that you're mainly executing from, right? Let's just go further down here. Again, if you're looking at this from a 5 minutes perspective, low end of the curve, high end of the curve, right? Until one of those breaks. Then we've got it again, low end of the curve, high end of the curve, right? Potentially looking for shorts from here, even though none of these levels are really fresh. This one is probably good. This is a bit of a level. No, I wouldn't say that's a level test. I'd say that that's actually moved into that because we've got a nice swing. So the market's actually gradually moved down some. I would expect this just to push straight through that. But that is it on different time frames. The extremes aren't really that hard to find. It's just dependent upon obviously the time frame that you're mainly executing from. Or I wouldn't say executing, sorry, I execute from the H1. So the main time frame that you actually look at to define your event chain. So whether you use the H4 chart to begin with, and then you use the 5-minute to define your event chain, or the 15-minute to define your event chain. For me, I use the dailies, and then I use the H1 to define my event chain. Okay, so that's the most important part. The extremes, they're everywhere, but it's entirely dependent upon the time frame that you're using not the time frame you execute on, but the time frame that you use to then define the event chain. All right, so I hope that is clear, guys. Extremes are absolutely everywhere, but it's entirely dependent upon the time frame that you trade off. See you in the next video.